This podcast is for informational purposes only and does not constitute financial advice. Consult with a qualified professional before making any investment decisions.
Welcome to the Wire Weekly Roundup. The week in real estate presented in digestible bites. Hold on while our AI hosts take us on another ride through this week's top real estate headlines.
Welcome back to the Deep Dive, Wire Watchers. You've pulled together another really interesting set of articles for us.
Yeah, definitely.
And it's clear the real estate market is, well, keeping everyone guessing, isn't it?
That's putting it mildly.
We've got stuff on how sellers are changing tactics, some confusing price trends, and even a big industry debate over listings.
Yep.
So our mission, like always, is to kind of wade through all this, connect the dots, and figure out what it actually means for you.
Absolutely. And this week's articles, we're looking at NAR, Zillow, Redfin, WAV Group, plus some strong opinions from CEOs. And
yeah.
It's a real mix. We want to get past the headlines, you know?
Right. Understand the why behind it all.
Yeah.
And where people disagree.
Exactly.
Okay, let's dig into the first big theme, though. How sellers are adapting. Two things really jumped out. First, seller concessions. They're way up. Redfin said in April, what was it, like 44% of sellers are giving them? Almost a record high.
Yeah. And get this, in Seattle, it's apparently 71%.
71. Wow. That's nearly double last year.
Crazy, right? The report suggests it's, well, economic uncertainty making buyers nervous, plus rising costs overall.
So buyers are hesitant. And they can be because supply is up too. A 5-year high, I think it said.
Exactly. More choice means more buyer power. They can ask for help with closing costs, repairs, you name it.
Makes sense. And that stat about 13% of pending sales falling through in March.
Right. It shows buyers aren't afraid to back out if things don't feel quite right.
So it feels like the power dynamic has shifted, you know? Redfin even suggested sellers might need to price lower up front.
Yeah, basically price it right from the start to sell faster and maybe avoid those concessions altogether. It's quite a change from the bidding wars we saw not long ago.
Definitely a flip. But the other seller strategy that caught my eye, this was from that WAV Group report, pre-sale renovations are becoming more common.
That's right. Not just for flippers or like super high-end homes anymore. It's going mainstream.
Okay.
WAV Group used data from Revive Real Estate, and the numbers are, well, pretty compelling.
Like what?
Like an average added profit of $145,000 for sellers using Revive. Now, obviously, individual results vary, but still.
Wow, okay.
And a typical ROI of 112% on the renovation investment, plus the property value boost averages around 28%.
That's significant. And it ties into that other point. 80% of millennial buyers prefer move-in ready homes, right? And they're the biggest group buying now.
Exactly. So if you're selling, making it move-in ready suddenly looks like a really smart move.
Yeah.
You know, it's not just profit, it's meeting a clear buyer demand. They value that convenience.
And Revive handles the whole process. Funding, planning, contractors. Sellers only pay at closing.
Yeah, that lowers the barrier for sellers quite a bit. No upfront cash needed, essentially.
Plus, they're using AI now to analyze photos and suggest the best upgrades.
Revive AI can apparently look at listing photos, figure out what improvements would add the most value, and even estimate the after-renovation price.
That Austin case study was pretty impressive. Spent $114K on renovations, get $305K more than the as-is price.
Yeah, a 167% ROI for the seller. And of course, a higher commission for the agent, too. It shows the potential when it's done right.
It really highlights how buyer preferences and these new tech solutions are coming together. Millennials don't want the hassle of renovations.
And sellers now have easier ways to deliver that finished product. It's proactive.
Okay, let's switch gears a bit. Let's talk about the broader market dynamics, sales, prices, inventory. We're seeing some mixed signals here.
Definitely some head scratchers.
NAR data from late April showed existing home sales dropped in March, both from February and year over year.
Right. And that was even when mortgage rates had dipped a little bit.
So what's going on there? If rates were slightly better, why did sales fall?
Well, the NAR report suggests it's not just rates. It's bigger economic worries, personal finance concerns. People are just feeling cautious, maybe.
Okay.
And the fact that pending sales were also sluggish heading into April kind of backs that up. Demand for existing homes seems, well, soft.
Right. But here's the weird part. Even with sales down, the median existing home price hit a record for March, $403,700.
Yeah, although the increase year over year is slowing down a bit, but still, prices holding strong even as sales dip.
And inventory of existing homes jumped too, giving buyers more choice.
A pretty big jump, 8.1% in a month. About a 4-month supply now, so yeah, more to choose from, but things are selling slower than last year.
So existing homes, slower sales, more inventory, yet price is still high. Okay. But then, new home sales. That's a different story, isn't it?
Totally different. Zillow and World Property Journal both reported new home sales actually beat expectations in March, up month over month and year over year.
Huh. And the price is there.
That's the key difference. The median new home price was basically the same dollar figure, $403,600, but that was actually down 1.9% from February, and get this, down 7.5% from March last year.
Wow, 7.5% lower year over year. How?
The reports say builders are really pushing sales in the lower price ranges, under 400 LKs. They're focusing on building smaller, more affordable homes.
Ah, okay. So builders are adapting price and product.
Seems like it. And they have a lot of inventory, like an 8-month supply of new homes. So they're motivated to move them.
So it's like two separate markets almost. Existing homes struggling a bit with buyer caution, while new construction is finding buyers by being more affordable.
It kind of looks that way, yeah. Different dynamics at play.
Now, overall price trends across the board. Redfin's data, looking at the 4 weeks ending April 20th, prices actually declined year over year in 11 big metro areas.
Yeah, 11 out of the 50 most populous. That's the most metros showing a decline in like 19 months.
Which cities were seeing drops?
Let's see. San Antonio, Oakland, Jacksonville had the biggest drops, but also places like Phoenix, Austin, Dallas, Orlando, a lot of formerly hot markets.
Interesting. So even though the national median price was still up slightly year over year?
Right, up 2.1%, but that's the slowest growth rate we've seen since July 2023. Things are definitely cooling overall.
And rising mortgage rates again, hitting almost 7% recently. That's probably not helping buyer confidence either.
For sure. Economic jitters, higher rates, it makes buyers pause. And it slows down that price growth.
Zillow's March report seemed to confirm that cooling trend too, right? Lots of new listings, but also lots of price cuts.
Yeah, they saw over 375,000 new listings. Inventory went up, and almost a quarter, 23.5% of their listings had a price cut in March.
23%. That's the highest for March, going back to at least 2018, they said.
It really points to sellers having to adjust expectations. Their chief economist basically said, yeah, rates dipped a bit, sellers jumped in, but buyers didn't quite keep up, so more inventory, more cuts.
And even with this cooling, we still have that crazy stat. Starter homes costing $1 million or more in 233 cities.
Yeah, that one's wild. It just shows how much prices shot up during the pandemic, and that affordability crunch isn't just vanishing overnight, even if things are flattening out a bit now.
Okay, this brings us nicely to our last big theme. This whole fight over private listings. This seems pretty heated.
Oh yeah, it's a big one.
So Zillow and Redfin basically banned publicly marketed listings if they aren't also on the MLS and shared through those IDX feeds.
Correct. IDX feeds are what let different websites display MLS listings, making them widely available. So Zillow and Redfin are saying if you want to market it publicly, it needs to be in the shared pool via the MLS IDX.
And some people really support this, like Donnie Sampson from Sampson Properties.
Right. His argument is all about transparency, open access, fair competition. He points to studies suggesting MLS-listed homes sell faster and for more money anyway.
Okay.
He thinks these private networks, or exclusive listings, often just help brokerages get both sides of the deal representing buyer and seller, which might not always be best for the client.
Double-ending the deal, yeah.
He admits there might be rare cases needing privacy, but says there are already ways to handle those. He sees this push for exclusives as, like, going backward from the open system the MLS created. And West USA Realty jumped in supporting Zillow too, talking about pro-consumer transparency.
But then you've got Robert Refkin from Compass on the complete opposite side, calling it bully behavior.
Yeah, he's not holding back. Abuse of monopoly power, anti-competitive.
Right.
His take is that Zillow makes money from buyer leads, right? So he claims this policy forces homeowners to list in a way that benefits Zillow's lead gen business. He even suggested Zillow and Redfin are coordinating with others to shut down off-MLS options.
Wow. Strong accusations. And then Glenn Sanford from EXP challenged Compass to show data proving exclusives are actually better for sellers.
Yep. It really turned into a public spat. It highlights this core tension, doesn't it? Open market versus exclusive access. Whose interests are really being served?
Definitely a major industry debate with potentially big consequences for how listings work.
Absolutely.
Okay, so we covered a lot of ground. Thinking back over everything, what's one thing that really stands out as maybe surprising?
Despite all the talk of cooling and caution in the existing home market, that unexpected strength in new home sales in March is pretty striking.
Yeah, that divergence was interesting.
It shows how builders adapting their product, smaller homes, lower prices, can actually find traction even when the rest of the market is struggling a bit more. It really highlights that the market isn't just one single thing.
Good point.
And honestly, that other number, 233 cities where a starter home costs $1 million or more, that's still kind of shocking. Even when you follow this stuff closely, it just hammers home the affordability problem.
Yeah, sobering is the right word for that one. Okay, so boiling it all down, what's the key takeaway for our listeners navigating this market right now?
Well, I think the main thing is that it's a really mixed bag. It demands a lot of attention. For buyers, there's more inventory, maybe more negotiating room with concessions popping up.
So some potential leverage there.
Some leverage, yeah. But you still have to wrestle with economic uncertainty and those mortgage rates bouncing around. For sellers, it's about understanding that move-in ready isn't just a preference anymore. It's a major driver for a huge chunk of buyers.
So seriously, consider those pre-sale renovations, or at least price realistically from day one.
Exactly. Strategic renovations could pay off big, but competitive pricing seems more critical than ever. Really, the bottom line is, know your local market inside and out. National trends are one thing, but what's happening on your street is key.
Absolutely. Local knowledge is crucial in a market like this. Well, hopefully this deep dive gave you, our Wire watchers, some good context and things to think about.
Yeah, keep watching these trends.
For sure. And ask yourselves, what's the biggest shift you're seeing and what questions does this raise for your own plans? That's the important part.
Definitely.
All right, until our next deep dive.
If you're interested in your own personalized edition of The Wire, please visit us at thewire.fm/custom. We offer market-specific podcasts with all the latest real estate news and market analysis delivered to you weekly or monthly. Own your market with a personalized edition of The Wire, The Week in Real Estate. Thank you for listening.